All right, guys, new week. This is also the last week that I will uh, wake up and consider price action. So looking here, starting out for the week, not a heavy red for the week, at least for the New York session and the London session. We do have this CPI here for pound USD, but other than that, we don't. I don't think we get a lot of heavy volatility injections from news until Wednesday. Monday and Tuesday, once again, are pretty fair. All right. And jumping over, just as a reminder, in terms of the seasonality, right? We came into the month expecting for the dollar to have a decline, right? And that has since shown up in the actual chart, right? And this is what we're seeing going on equityclock.com, 20 years worth of data. All right. And then moving from there, we'll take a look at the, so this is the 5-year, 10-year, and 30-year keynote. All right. And obviously, if this continues to go up, then we expect the dollar to decline. And what I notice here is these phases of redistribution that we saw on this sell side of the curve, right? Those areas are now being taken out, right? So what we would anticipate is that these areas, and as you can kind of see what's occurring, those areas are used to be used for redistribution. Now we can see reaccumulations from those particular areas. All right. Also, what I do notice here is this volume imbalance. So there's literally no delivery within this particular area. More times than none, we'll see price wanting to offer buy side and sell side. No different than this here, right? If you look at this gap down, right, we had to offer buy side and then sell side back through that area. All right, so I do believe we'll come back up, and then we'll do the same for this as well. All right, looking at the one just below, here we are here. And this is a 30-year in the green and black color. The same idea, right? I'm expecting us to, at least seek that sell side imbalance. All right. And this is kind of similar to EU and GU because those guys both have equal highs. All right. And then can't really see much on the 5-year, but it's giving us the same characteristics. So everything is pointing to much higher prices. If I look here, I'm seeing that down close candles. These guys are supporting price. I don't necessarily anticipate that to change. All right, same idea down here on the 5-year. Those down close candles are supporting price. All right, so that means we should see the dollar continue to decline. All right, now that doesn't mean we can't have short-term retracements like I think we're going to have earlier this week once we look at the chart. But overall, we should be expecting the dollar to continue to show weakness. All right, taking this to the chart. Looking at the dollar index, right? So we have this volume balance here, which we saw that these areas truly hold as pretty strong support and resistance. All right, we have somewhat of a balanced price range here with those two inefficiencies that double pass through. So what my anticipation is for us to, I'm thinking open, high, low, close for the weekly candle. All right, so this is the daily chart. What I want to see is that weekly candle dig up somewhere inside of here, right? Maybe right into premiums of that range. We have this little point of fair valuation here. All right, but I want to see price run higher into premiums and then potentially give us that decline. So we should be thinking market makers sell program, right? Running up into this area and then seeing institutional order flow change over. And we want to attack this 101.7. I'm just going to call it 101.750. All right, but it's actually 101.7333. All right, and the reason I'm targeting that level, right, is because it's very obvious that we have equal lows at this particular level. So this week, I believe, provides a great opportunity. All right, if we can see price, uh, come up here and take care of business up here, we'll be looking and anticipating a smart money reversal. Rather we get a failure swing breaker on a higher time frame, right? And what's really important is that we find that last phase of accumulation. It's no different than what we were looking for up here, wanting to see that last phase of accumulation taken. All right, you don't have to pinpoint the smart money reversal, all right, because there's going to be a lot of intraday opportunity taking us back into this level, all right? And if we scale up to the weekly time frame, we have this balance price range, fair value gap, whatever you want to call it. All right, and the next best thing that I like about DXY at this point in terms of seeing more bearish prices is, this phase of redistribution. We now have a bearish order block after trading and closing through that level. All right. So thinking open, high, low, close, that next weekly candle, we want it to look like this. All right. And from there, you take your understanding of daily, weekly profiles into effect. All right. And seeing how that translates into the euro, right? Pretty obvious that the euro has equal highs. This played out perfectly. We were 2 weeks ago, we thought we'd get that move back up, right, earlier. But the biggest point was that we understood we were seeing a market maker buy program form, right? Prices just reaching down into a discount array, which happens to be that weekly order block. This is also an area of fair valuation on the daily time frame, right? And then we saw that smart money reversal, and then FOMC gave us that volatility expansion. I do think that because we had such a strong move from FOMC, right? What we're seeing now is we're just seeing price come back and fill in some of that liquidity void, which leaves this buy side imbalance here. What is this level? Let's go right here. That level comes in at 0.8700. All right. I believe that we'll see open low, high close for the weekly candle. So if we're opening here, we should see the wick straight down into that fair value gap. And then I'm wanting to see price expand higher, right? Trading and taking out the intra-month high at this particular point. All right. So biggest thing about this week, yes, that's the anticipation. However, we can't just jump ahead and say, yeah, price is going to turn around. No, we have to understand that order flow here is right. If we're thinking market buy program, we want to see smart money reversal, and then we want to be thinking, hey, we can step in at that very first phase. All right. So it should be simple, but also want to keep in mind we're just measuring this range. We go through our PD array matrix. So we go from that high, that low to that high. 50% is right where that buy side imbalance begins. Okay, which is perfect. We'd like to see confluences like that. All right, and then we have this is a breaker, that area there. All right, and then we also have a daily OB. So we'll keep in mind these few things here. So in terms of PD array matrix, what we have is an order block, right? We do have rejection block, breaker block, right? But then we have this fair value gap right here. Okay. And the biggest thing is open, low, high, close should take us back to I'm calling 110-200 as the draw for this particular week. And then, you could take, fib extensions, potentially, let's say if we go from here to here. It's not gonna see. All right, it's not gonna show up. But basically what I was gonna look for was if there's any type of fib extension that maybe aligns with the next PD array. 0.27 might align with that high, 110665. All right. But you got to go and check that out in your own charts. Going to pound USD, same idea. Pound USD, obvious equal highs, small volume balance here that we'll be very, very mindful of. But biggest point, we're seeing that weekly candles are supporting the direction of price. Pretty much the same thing that we saw when we were looking at the T-note charts. All right. And seeing price dive down into the discount array. There's also a daily order block that rests right here with these particular candles. And then we saw that smart money reversal. FOMC gave us that expansion. We took out those equal highs. All right. And now what we're probably going to see is price just get into an imbalance, trading stops to imbalance and balance back to stops. All right. So we're calling 1.2800 as the draw for pound USD. And then as mentioned with the euro, right, just because that's our analysis going into the week, right, we want to take this range, go through our PD array matrix. What I'm seeing here is we took out that low. So I can't call this I don't want to call that a breaker, but either way, it should be a significant point, right? This was a last phase of redistribution on a lower time frame. But we'll have this weekly, not weekly, but daily buy side imbalance. We want to see institutional order flow go from bearish to bullish inside of this area. And seeing that we have very clean equal highs at this 128,000 level, there's opportunity in that second phase reaccumulation if we get it. So no need to rush and try to catch the very pit of the week or low of the week. All right, but we first have to uh, see that price is actually wanting to turn around. All right. Moving to NAS 100. All right, we were calling this level when this was the December high right here of 2021. When we saw this level taken just by a pip, not by a lot, but I do believe different broker feeds showed a different scenario. But we did take that level. The biggest point about NAS is I believe that we will create a new all-time high down into a daily chart, right? Most ideal scenario would be for us to come off of this high here and then trade back lower, maybe inside of this particular area. I would like to see us go into discounts. I don't think we travel here to come here, right? If anything, I believe we'll come here and then we'll travel back lower. All right, but I want to still see price digging, maybe even to this point. But the biggest thing is we'll be sensitive to wanting to see buy side delivery from somewhere within this particular area, because I do believe 16780, or we would just call that number. I think it's 1680. 16780 or 800. I do believe we'll see NAS reach up into that level. So I'm also thinking open low high close, wanting to see price trade down into discount raise. All right, but we will be mindful that this volume balance here could show support for price. And if we run and take out this level first, right, then I think we'll see price want to come back down and fill in some of this liquidity void that was left from last week FOMC release. All right, and also taking a look at gold. Gold has created all-time highs um, on the 4th of December. All right, but even if this is going to be the highest point that gold creates, I believe it's still due for another drive up. Maybe treating that as a short-term high and then taking it out. So I would say if you trade gold, I would look to be bullish on gold, and not simply because these bearish order blocks, weekly order blocks should hold up, right? We're seeing rejection from that level. We have that weekly inefficiency, and gold kind of has the same scenario as pound USD and Euro USD. We have equal highs here, right? And then we're down inside of this liquidity void, all right? Balanced price range there as well, which should hold as decent support. The biggest thing about gold is you should be looking at your lower time frame and framing out that market maker buy program, all right, wanting to see phases of last redistribution taken out, and then we can start catching that reaccumulation to take us back up to these equal highs. All right. That is it in terms of a weekly analysis. I think this week is very simple. I think we have some very obvious targets. There's equal highs, equal lows all across the board. So let's just be patient, allow price to trade into premium, trade into discount, and actually prove to us that that smart money reversal has occurred. That order flow is now in the direction of where we're wanting to trade to. All right, let's finish 23 out strong.